The model is actually, stolen from tech. I mean, I think this is why we're with $1.6 billion, the largest biotech IPO in history. It's because we're not bringing a drug out to market. What we're bringing out is a platform, right? It is like an operating system or an AWS or an app store. And the idea is if we're successful, all of those apps should ultimately run on Ginkgo's platform.
Hello, what if I told you there is a company that claims they could change biology as we know it and will do so by reprogramming organic matter from the cell up? Evolution of life has taken billions of years by natural selection and mutation, but Ginkgo Bioworks claims to have built a platform and code base that will enable them to reprogram living cells, and it comes with little surprise that they call themselves the organism company. The applications of what they are looking to disrupt seemingly has no bounds. This is a biotech play that, if all the pieces all fall together, could become the next biggest company to change the world since Microsoft and Amazon put together. And for world-changing potential, I think it could be in the same category as Palantir, but I'm afraid it ain't all rainbows and dinosaurs just yet, so stay tuned for this deep drill and more. Keep it simple. Well. Once in a while, you stumble upon a company that you think has great future potential on paper, has all the big hitting investors, and is looking ripe for an early entry for that explosive gain. But then you have to ask yourself, is it all too good to be true? Like the investors in Shark Tank. When I originally drilled into Ginkgo Bioworks ticker symbol DNA back when its merger with Harry Sloan's SPAC vehicle Soaring Eagle was just announced, I had to say,
I'm out, so I am out, so I'm out.
But remember, Harry Sloan orchestrated the SPAC mergers with both Skills and DraftKings. More curiously though, is the Bill Gates Cascade Investments interest, and also the fact that ARK Invest and Cathie Wood have loaded up big since the stock went public back in September.
We are focused only on disruptive innovation. That's our sole focus.
So what do I think of the stock now that the market has had a few months to literally digest it? Remember, I ain't no financial advisor, I'm just a simple trader, so no more plugging and let's start drilling. With all new public companies, the first thing to note is, do they have any backers? And if so, who are they? There are some big hitters piled into this company's stock, which include Cascade Investments, or simply put, Bill Gates, and they had loaded prior to Ginkgo going public. In the most recent SEC filing, we see that Cascade have over 151 million shares, and considering shares outstanding are close to 2 billion, this means Cascade owns roughly 7.5% of the company, which does seem quite bullish on paper if you ask me. Who else? Well, how about ARK Invest and Cathie Wood, who since Ginkgo went public have acquired close to 3.5 million shares, equating to approximately 1.5% of the company. So do you trust in ARK's own due diligence is the question right here, right now. One more worthwhile investor to note is during their Series F funding last year, one of the investors included Illumina, who are another biotech company in the genetic sequencing sector. I would love to drill deeper into this if everything else checks out, but on face value, I think they must see something in Ginkgo that they could feel could spark a collaboration in the future of some kind. The largest institutional investor is hedge fund Viking Global, and they are also deep in Ginkgo stock with a massive 24% of the company prior to the offering. But is there also more here than meets the eye? Let's come back to Viking shortly. Okay, so what the DNA is Ginkgo? I think this description on their website simply sums it all up. We're building the back end of the bioeconomy. Biology is everywhere. At Ginkgo, we see the potential for biology to transform all industries. Working with our partners and growing ecosystem, we design custom organisms that bring new products to life for countless applications. If that doesn't help you to paint a picture of Jurassic Park, then maybe this banner on their LinkedIn page will. Okay, so they are basically messing around with Mother Nature, right? The applications do seem endless, and as they highlight in their website, they are looking to develop next generation antibiotics, vaccines, testing, living medicines, food, agriculture, digital technology, and more.
We just announced a partnership with Aldevron, one of the big mRNA vaccine manufacturers, where we gave them a programmed cell that improved the production of one of the ingredients for mRNA vaccines tenfold. And so, we'll get royalties on that just like we normally do, but it also speeds the scale and productivity of mRNA vaccines for biosecurity.
Okay.
Is it too far-fetched to imagine the future world where everything we eat and consume may actually have origins connecting back to Ginkgo? If they are who they say they are, and they do what they say they will set out to do. Okay, so the idea is looking grand and exponential, but what is the business model moving forward? Is it just a Fugazi? Let's drill into the third quarter results released on the 15th of November. The headlines are looking actually very bullish, and they state their foundry revenues came in at $34.7 million for Q3 and total $78.8 million year to date. That may not sound very impressive, but when you realize that year to date total revenues already reached $165.3 million, up from $44.6 million year over year, it means a huge whopping 271% growth thus far. Even when the parts are broken down, we see foundry revenues year over year growing 202% and year to date an increase of 84% year over year. Their biosecurity Q3 revenues also grew so big and by 48% year over year. The growth just seems crazy for a company that was actually founded in 2009, over 12 years ago. What has changed so drastically in the last 12 months? Drilling deeper, we see improvement of Q3 loss from operations year over year were noted, but year to date loss grew to $143 million from $81.1 million year over year. Q3 EBITDA improved from negative $30 million to negative $18 million year over year. Okay, so they are still making a substantial loss. Taking those numbers into account is kind of offset by the fact that they have hoarded a massive $1.7 billion in cash. Yes, $1.7 billion in cash through the proceeds from the SPAC merger. That's like enough cash to do eternal R&D, right? How on earth has a $78 million revenue generating company managed to hoard $1.7 billion in cash is beyond my understanding. You would have thought for a growth company they would have piled a huge number of that straight back into R&D. Or is there more than meets the eye right here?
Yeah, I mean, this transaction's of $1.6 billion coming in the IPO. That's the largest biotech IPO in history, right? And if you understand Ginkgo's business, we operate as a horizontal platform. Think kind of like an Amazon Web Services or an Apple App Store, but for programming cells.
They note 8 products have been manufactured at scale from Ginkgo programs, which has more than doubled year to date. Biosecurity revenues equated to $42.9 million in Q3 and $86.5 million year to date, which has already exceeded their full year outlook. Does that seem rather impressive, right? Unless they either completely lowballed previous outlook or they are really hitting the ball out of the park. We can't do a drill into DNA stock without looking at the recent short attack report on Ginkgo from none other than Citron Research, which actually just rides on the back of the huge 175-page Scorpion Capital short report. I drilled into this report so you don't have to, and on the release of this short attack, the stock tanked 24%. Now, after drilling deep into this report, the claims to me seem fairly legit, if not raising certain serious questions, and if they are legit, it means the whole company, being Ginkgo, could be a fairy tale $26 billion shell company, similar to a Theranos, and Google it if you've never heard of Theranos. So, what are the smoking guns here? One of the biggest claims is that business model of Ginkgo is a shell game, meaning its reportable revenues were essentially derived from related party customers it created funded, controls, or influences via its ownership position and board seats. What this means is essentially they are unnaturally creating the revenues they claim themselves. Fake business, and is simply a Fugazi.
Yeah, and I guess just to dig into that business model a little bit more, you mentioned the fees.
Yeah.
I mean, so it's almost like you have, for example, startups that I know you're excited to get on board the platform.
Yeah.
Is it almost becomes biotech, or I guess...
The words from the report are strong, and they describe Ginkgo as a colossal scam, a Frankenstein mashup of the worst frauds of the last 20 years, the US version of the China hustle. The report dives into the actual claimed technology, which they say is a mere smokescreen, and in fact they are just using low-tech automated liquid handling machines and fermenters, the same as the ones being used by the rest of the industry, including closest competitor Zymergen. They note Zymergen stock tanked 75%. This comparison does spread a bit of fear, certainly, I would imagine, if you are a shareholder. What about Bill Gates' Cascade Investments? Well, Cascade Investments started buying the company Series C at a $450 million valuation. What about the largest investor, Viking? Well, they too started buying DNA stock in the private markets during the Series B at a $200 million valuation. And now that the company valuation is at a whopping $26 billion, what the DNA? I think it's very important for us retail investors not to just follow the so-called smart money without doing your own due diligence. Good or bad, these guys got in big and got in early. Now, they could unload the dog poop, so to say, and still profit enormously right now. Now, the report paints a pretty damning picture, if you ask me, in that they present some details on how they believe Viking could be complicit in all of this. How? They highlight that Viking, together with Ginkgo, have invested in several companies that have then gone on to become related party customers of Ginkgo, and these are all used to apparently prop up the numbers, so to say. Just one example worth noting is Alonia LLC, which Ginkgo derived a $38 million deferred revenue as of March 2021. Yet in Alonia's corporate filing, it lists Ginkgo's corporate headquarters as its principal own office. Then, even more suspicious is 3 of 5 managers declared are Jason Kelly, who is Ginkgo's CEO, by the way, and then Jason Kakoyannis, whose LinkedIn bio states he is Ginkgo's head of ventures, and Peter Leifer, who appears to work for General Atlantic, who are one of Ginkgo's largest investors. The Alonia website is also beaming with red flags, as they note powered by Ginkgo Bioworks, and also credits Viking Global and General Atlantic. Same trends are identified in several other key customers of Ginkgo.
Like, the range of places you can apply this is really broad. And so the thing I'm most excited coming up, startups, small companies. You should be able to launch a new company on Ginkgo's platform without building a lab. You can just have an idea for a cell program. We'll do the biotech, and you can commercialize. And that's exactly like what the folks at Motif did. They're food scientists. They're expert food people. Right? They're making like Impossible burgers. They didn't have to have any biotech people. Ginkgo handled all that. It's like outsourcing to the cloud if you were starting a website. Same idea. So startups is really where I want to grow.
Whether you agree or not with this 175-page short attack, I believe there are red flags identified all over the place. When you piece them all together, it does paint an incredible picture similar to a Theranos, or more recently, a Nikola. The biggest red flag for me, again, is the apparent circular money, which looks suspiciously likely given the in-depth research from this short attack. However, for me, I would take any short report on a stock with a pinch of salt. In the world of investing, these kind of reports may have their merits, but you have to ask yourself, what is the motive behind the report, and who would stand to gain should the stock tank big based on such a report?
And just to wrap this up, I mean, stock's up 19% right now.
Yeah.
You've raised $1.6 billion through this merger process.
Yeah.
Where will that go?
So here's what I'll say. We want to invest more in building out scale on those platforms.
Okay.
You know, one thing that's cool about this today, it's a moment to tell the public about programming cells. right? Like we put a dinosaur on the outside of the stock exchange. Like kids, my kids hit the bell today. Like kids are obsessed with biology. We grow up knowing it's wondrous, and then we forget about it, or we're told it's not important. That's not the next 50 years. It's not computers. It's going to be biology and DNA, and you know, trading is DNA, and being up today with this scale is just awesome.
To summarize, Ginkgo Bioworks for me could be a potential Palantir-esque company in the long term, regardless that they share the same name for their platforms, or it could be a complete deepfake. If I'm gonna invest into this company, I would do so on the back of a very, very long-term hold, but I need some serious proof of concept before going long on this stock. The only piece of the pie I cannot fully get my head around is how ARK Invest have loaded into this stock. But if Ginkgo do continue to grow, or at least report that they are growing, then I do see their stock moving up in the short term, as hype in the market currently seems to dominate versus fundamentals. But with all successful companies in the long term, the business has to be real at some point, right? Currently, they have an unbelievable market cap of $26 billion, and for a company that went public via SPAC rather than IPO, kind of does suggest there could be something sinister going on here when you consider their total revenues year to date is only $78 million. Then they will have a revenue to market cap ratio of over 330. Compare that to Palantir's $1.1 billion revenue and market cap of $45 billion, which means a ratio of around 40. I think I'll just leave that comparison for you to chew on. Thanks for watching, and please note, for me, Ginkgo Bioworks represents huge unparalleled potential in this space, but I believe it is a serious gamble to invest into this company at this stage. Having said that, those who risk the most are rewarded the most, so please take this drill with precaution and always do your own DD. If you found this video informative, then do me a simple favor and just consider subscribing to my channel so you get a pop-up when a new video is uploaded. I am a simple trader, and I try to keep this one simple, and will simply see you in the next video.